Good afternoon, Wall Street winners. It is Wednesday, March 26th, after market close. And I just wanted to take a minute to talk about Liberation Day, which could end up being Libation Day. We're not sure which it's going to be. But today, obviously, was a tough day in the markets, especially if you were going long and you had invested on Monday and we're bullish based on the euphoria, which we cautioned against. The Nasdaq was off 2%, so a lot of the Mag 7 getting hammered today. The S&P 500 down 1.12%. A lot of banks got hit today, and we heard from Jefferies, which is one of the big investment banks. Oddly enough, it announces earnings much later in the quarter than all of the big names at the front, so it's almost a quarter behind, and its numbers from investment banking, asset management, wealth management, all disappointed. So it is going to likely be down tomorrow as part of the sea of red today. But as we turn our attention back to Liberation Day, I think one of the key items or issues to come out of Liberation Day is just a level of consistency in the tariffs. So regardless of what the tariffs are and to what countries they apply, what we need to see out of the new US administration is adherence to what they state. If we hear tariffs on Liberation Day, and then a day, 2 days, a week, 2 weeks later, start receiving Truth Social tweets or posts about new imposed tariffs or the potential for new imposed tariffs. That is what is going to create absolute chaos and volatility in the markets. And that will be detrimental globally, not just to the US and other Canada, Mexico, the dirty 15, all of the countries that have a trade deficit with the US, but this will be an effect that will impact the entire world from a global economic standpoint. So we really have to hope that the folks on the new Trump administration team implementing Project 2025 have a well thought through plan that they're going to implement and have the ability to control the messaging coming out of the president's True Social account. That is probably the biggest concern that most investors, both retail, but maybe to a lesser extent, and institutional to a much greater extent, professional investors have going into this Liberation Day. So again, this is a time to be very risk averse, use as little of your own capital as possible to make investments in against the direction you feel the markets are going to move. And as I've alluded to in the past, I think buying puts out past April 2nd and into mid-April, either on ETFs or um, n- uh, indexes that represent groupings of stocks. They could be sector weighted indexes or the S&P index as a whole or the Nasdaq if it's the tech sector, to buy puts on those so that you are able to make some money and profit in this downturn that and correction that we are only in the beginning of, in my mind, as we head into April 2nd. So that's really what I wanted to share with you today. I hope that helps. I hope it gives you some guidance. Again, when the markets are green, don't be buying long positions. If anything, you want to buy a long position today when markets are in the red and everyone is trying to sell. You want to be doing the opposite of what the markets are doing. When the markets are green, you want to be selling and or buying puts. And when the markets are red, you want to be buying or buying calls. That would be my guidance going forward. Minimize your risk exposure, keep your dry powder, which is your cash, as high as possible in your trading accounts so that you can start to enter the market cautiously when you have a feeling that consumer confidence in the US, which is going to be the driver to the economic recovery there, starts to pick up. Good luck in your trades. And if you like these videos, please hit the like and subscribe button.